4.3% mark. We had oil as well, a bit softer so far in the session, although it did climb to its highest level in a year. In the close yesterday, we had the IEA predicting an oil supply deficit over the course of this year. Stocks, they were a little bit weaker overnight as well, and we are seeing again that reflected so far in futures, particularly that tech-heavy NASDAQ there you can see. But there is certainly a lot of pressure on companies to be meeting very high expectations here, particularly when it comes to the tech sector, and Adobe is really reflecting that so far today. That's the after hours you're seeing there, that drop of more than 10%. It's given a weak outlook for the sales in the current quarter, and a lot of concerns around whether these sort of AI-focused startups are going to be posing a competitive threat. But Heidi, it is that focus. Are we going to see that earnings growth and that momentum to continue to propel the S&P 500 higher?
Yeah, let's get some views now from Elfriede Jonker, who's a client portfolio manager and investment specialist at Alphinity Investment Management. Elfriede, happy Friday. Always great to have you with us. And I suppose the sort of existential question over the repricing of when we get some relief on rates from the Fed, does that impact where we see the rally across some of the growthy parts of the market go?
Yes, obviously that's always the case. When you have rates repricing, the higher valued companies always come under pressure. I think the important thing to distinguish at the moment is just how many of those growth stocks, particularly the AI-driven stocks, have enough earnings growth to continue to propel them, and really taking a closer look at each of those companies' valuations and determine which ones are actually not looking as expensive as the others. So for example, NVIDIA, that's obviously well talked about, and the AI darling, it's interesting to note that that company is actually cheaper than a year ago at the moment from a multiple perspective. So I think that's going to be the important thing. There will be growth companies that will definitely come under pressure because all that's been propelling them have been their valuation expansion. But then also, on the other hand, there's AI beneficiaries that we believe will continue to give you that incredible earnings growth for the next few years.
Yeah, talk to me about some of the beneficiaries, because even as we see still not that much market breadth, are there more opportunities in names and parts of the AI narrative that weren't there before?
Yes, definitely. I think one of the things that's been really interesting is just how fast the market is moving down that sort of ecosystem to the next derivative of beneficiaries in AI. So for example, at Alphinity, what we have is we've got exposure to that early enablers. So we still have a lot of exposure to the big five of the big seven, NVIDIA, Microsoft, Amazon, Google, which is sort of becoming the LLM 5 at the moment. And I think you see that divergence within the Mag 7 happening. But then we also have exposure to that next step of beneficiaries. So the companies that's really adopting AI. And that is where I think there's a lot of focus currently on chatbots, LLMs, which companies can incorporate AI to benefit from an operational perspective, and cost beneficiary. So there you have companies like Airbnb, for example, talking around their AI chatbot that's going to act as sort of an AI concierge for clients. So we're looking at those sort of things to companies to say, how can they incorporate AI? And then I think the next step, and really where the discussions are moving towards at the moment, is not just those cloud producers, which is a big theme at the moment, but also, I guess, the next is the data center demand. We're going to get enough properties for that, and also what's going to happen from an electrification perspective. So that's definitely where the sort of narrative is moving towards, is to say, how are you going to source enough power, and will it be utilities? That's the next leg of growth in this AI trade.
Talking about the next leg of growth and further runs, there's a lot of focus on Japanese stocks, and we've, of course, had that big run-up over the course of this year. That could perhaps be tested depending on whether we see any sort of pivot from the BOJ next week. But what are you expecting for that market?
Yes, I think the general consensus view is that we probably will get that pivot that we've been waiting for a long time, and going into an era of away from that negative interest rate and yield cost control, definitely is going to be an interesting period for that market. So year to date, again, it's been the best performing market. If you look at in Australian dollar terms, a majority of that has been also driven by the multiples resetting higher, but there's also been some growth. So looking forward, I think it's going to be very important to distinguish between the companies that's got the pricing power that can really push through with higher costs, particularly higher wages coming through. And if we're going into a period of positive inflation, higher inflation, away from where we've been for the last decade or so, I think it's going to be very important to go company by company in that market, rather than just saying it's a market that's benefiting from China not doing well. It's going to be more of a stock picking market. Because if you look at the current composition of that market, we actually also have a bit of a concentration risk in the Japanese market. So the top 10 stocks also contributing around 60% of year-to-date returns. So similar to what you're seeing in some of the other major markets, but it's not the AI and GLP-1 narratives that's driving it. I think it's been more, as you've mentioned, from a banking perspective and some of the other sectors driving that rally. So yes, more stock-specific stock picking is going to be the order of the day in Japan, I think.
And to your point, because you did mention there about China and Japan sort of being a beneficiary from investors looking to take their money out of that market, but how concerned are you by the geopolitical headlines? And one of the ones overnight, of course, that we're tracking is this potential TikTok ban in the US. Who are the key winners out of that sort of situation?
Yes, it's very clear that this time around the TikTok ban has got more of an anti-China, I think, narrative to that. And I think if you look at the reaction in the market to the TikTok ban that's now moved to the Senate in the US, we haven't really seen a huge sort of price movement in some of the potential beneficiaries being Facebook, Meta, or even YouTube, Alphabet. So I think and the reason for that, if you look at the actual revenues that TikTok make out of the US, it's actually relatively small in dollar terms. So if you, on our numbers, if you assume that YouTube and Facebook sort of get all of that market share half-half, it can really only, on our numbers, contribute around 2% revenue growth to Facebook and around 1% to Alphabet. So it really is still a very small sort of revenue gainer for these big mega tech names, and there's a lot of water that still needs to flow under the bridge in this discussion. So we've been through this over the last year or two, so let's see how quickly that happens. So don't front run the potential output.
Alfreda, always great to have you with us. Alfreda Yunco is a client portfolio manager and investment specialist at Alphinity Investment Management. Speaking of TikTok, US Democratic and Republican senators are resisting calls to fast-track the passage of a bill that would force TikTok's Chinese owner to sell the app. The bill passed by the House this week demands ByteDance divest within 6 months or shut down the platform. Democratic Senator Richard Blumenthal says the deadline is too short. Republican Ted Cruz wants a review that could tie it up for months. However, the Senate Intelligence Committee chair told us that he supports expediting the bill.
They're collecting an enormous amount of personal data about Americans. The genius of TikTok, it kind of knows what you like even before you may know. And that kind of personal data, the 170 million Americans who are on 90 minutes a day, if you don't think that is a security risk, or potentially you could be blackmailed at some future time by agents of the Chinese government, then I think you don't understand the unfortunate real world that we live in.
Meanwhile, the top US diplomat to China has hit out against Beijing's objections to a possible TikTok ban. Ambassador Nicholas Burns spoke exclusively with our chief North Asia correspondent, Stephen Engel.
We've heard a number of complaints from the government here in Beijing this week about the American debate on TikTok. I find it supremely ironic, because government officials here are using the X platform to criticize the United States. They don't give their own citizens the right to use X, to use Instagram, to use Facebook, to have access to Google. And so it is ironic indeed that the government here is complaining about a process when they shut down access for 1.4 billion Chinese to all of these platforms. Every country has a duty and responsibility to protect its national security. And what the president has done over the last year and a half is to make it impossible for sensitive American technology, advanced semiconductors for AI purposes, to be sold to China, because we know it will happen. We know that the PLA, the People's Liberation Army, will take advantage of that technology to strengthen itself at the expense of the American military. We're not going to do that. We're not going to compromise on national security, and we're not going to negotiate. And you can bet that the government here in Beijing is taking similar measures. They have not allowed, for most of the last 20 years, the export of core, sensitive, national security applied Chinese technology to the United States. And so, you know, every government, and certainly our government, has a right to take these decisive steps, and that's what we're doing.
I also talk to a lot of businesses, and we all know about the FDI numbers, foreign direct investment, down to the lowest gain since 1993. There is hesitation, not only because of the economy is weak, but also because of the myriad of different national security and the opacity of such policy, especially coming out of the National People's Congress. We didn't get a lot of clarity on policy. We do know, and you were in that 60 Minutes interview where you did talk about U.S. companies such as Bain and Company, Mintz, and others who have seen raids and they've seen arrests of U.S. citizens. Can you elaborate on the threat and the pall that has been cast over the investment community and doing business, Americans doing business in China at this time?
I think this is a question central to the U.S.-China relationship for the next year and the year beyond. We have a $575 billion two-way trade relationship. China's the third largest trade partner of the United States. There are thousands of American companies doing business here. Here's the problem. They're hearing conflicting signals. Some senior Chinese government officials say private sector investment is welcome in China, your investment will be protected. But then these companies are also hearing a different message, whether it's the raids against American companies of last March and April, whether it is the opacity of the counter-espionage law, where espionage is defined in such a general way that normal activities in any other country of the world, the collection of data, could be construed as espionage. And so we see American firms backing away, or at least being very cautious about investing a lot of money here because they're not sure where the lines are. And I think the voices that they're hearing from the government here in China about national security, they're the strongest and loudest voices right now.
And that was the U.S. Ambassador to China, Nicholas Burns, there speaking with our Chief North Asia correspondent, Stephen Engel. Well, Stephen Mnuchin is targeting a purchase of TikTok from its Chinese parent company a day after House lawmakers passed a bipartisan bill that would ban the social media app from the U.S. The former U.S. Treasury Secretary told CNBC that he's spoken to potential co-investors about acquiring TikTok, but declined to give any specifics.
Well, coming up, we'll have analysis on Japan's labour market with recruitment firm Michael Page. We discuss how ongoing wage negotiations could impact the appetite for employment later this hour. But first, oil prices in focus after the International Energy Agency warns of a supply deficit throughout the year. That's next, and this is Bloomberg.
My name is Nikolai Coster-Waldau, and I believe this moment in time will be when we started to transform the way we live to inform the future we want.
Let's go to a cooler place.
This show is about solutions and the people behind them.
The worm that can actually dissolve plastic.
This would be a carbon-neutral jet fuel.
This is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
The idea that we can't transition is so wrong. We have better solutions. We just have to implement them.
You're telling me this is a mushroom?
Yeah.
It's so beautiful.
원피를 마이셀리움 매트로 대체하게 되면 한 99% 정도를 탄소를 절감할 수 있습니다.
I believe there's a material revolution happening. It transforms the way we think, the way we design things. We can work with nature and coexist in a better way.
With Fidelity Active ETFs, the potential is in the name, active. Active pursues opportunities, explores possibilities, and adapts to shifting markets. Take a more active approach with Fidelity Active ETFs.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow. on the differences between those asset classes and came up with a rationale to start a business in the parking space. Then I crossed paths with Penny Pritzker, who later became our Secretary of Commerce, and she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Well, the battle between activist shareholders and Samsung C&T is heating up ahead of the firm's annual general meeting. South Korea's National Pension Service is backing the company's board. NPS, which has a 7% stake in Samsung C&T, says it opposes activist funds' proposals on dividend payout and share buybacks. For more, our Asia Stocks reporter Yu Kyung Lee joins us from Seoul. And Yu Kyung, we can get to the NPS in just a moment, but first just start us off here with what exactly are these demands that are being put forward, and why is this vote so important today?
Sure. So Samsung C&T has been the classic case of the Korea discount. It's a holding company of a Samsung group. It has a huge stake in several listed Samsung companies, but even though those listed Samsung companies saw share prices rise for the past several years, the shareholders at Samsung C&T has been frustrated because Samsung C&T's shares prices have not been reflecting that surge in its key assets. So that's why the activist shareholders came in asking the company to pay higher dividend and 500 billion won of share buyback so that the company would be able to narrow that gap between its market capital and its net asset value and narrow that Korea discount. But we're watching the shareholder vote for several reasons. This is the most important vote since 2015 merger of Samsung C&T and JL that was opposed by minority shareholders and companies like Elliott, and since then, the Samsung's J.Y. Lee family was able to control a huge majority of the Samsung C&T. And today, we're seeing the Lee family and Samsung C&T board and management asking shareholders to accept smaller dividends because the company wants to save some money for the future investment. Now, this vote comes as South Korea's government is pushing for corporate reforms and asking companies to improve the shareholder returns. And that's the reason why a lot of shareholders and investors are watching this case as a test to South Korea's commitment in corporate reform push.
Yu Kyung, it's a little bit befuddling in terms of why there would be opposition to a proposal that is aiming to return more value.
Yeah, that's a good question. So the argument from the Samsung C&T's board, which has been asking shareholders to vote against the proposal for higher dividend, is that they want to save some money for future investment to secure a future growth engine. That was actually the argument that was debunked by some of the proxy advisory firms, such as ISS, which criticized Samsung C&T's argument as saying very thin light on details and just giving the promise of growth without giving much details about its CAPEX plan or future investment plan. Now, what we need to watch from now on is the role of the National Pension Service, which has the 7% stake in Samsung C&T, and which said last night it's going to support the Samsung C&T board suggestion for a smaller payout and no buyback. Now, the NPS decision to vote against the shareholder proposal is going to give more weight to the skeptics of the South Korea's commitment in corporate reform push. NPS is South Korea's largest stock market investor with more than $700 billion in assets. So its role was going to be really important, and how much push it's going to make to companies to pay higher dividends and improve shareholder returns was going to be watched. And now here we have NPS voting against the shareholders' proposal and supporting the company's board's decision, despite the recommendation from proxy advisory firms to vote for the shareholder proposals.
Bloomberg's Yu Kyung Lee there. We do have much more to come here on Daybreak Australia. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it?
Peacock. Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
What we changed in this month's report, following the decision by the OPEC Plus to extend the cuts through the second quarter, and then the announcement that they would only gradually unwind them once the market conditions warrant, we decided to hold them in place until the group announces or confirms that they will indeed unwind the cut. But based on our own balances, we do show some room for the group to increase production later in the year.
That was the IEA head of oil industry and market division, Tori Bozon, on why they're now forecasting a supply deficit for global markets this year instead of the surplus that was previously expected. And that's really, Heidi, been one of the key dynamics that we've seen in oil markets coming through, because there is that focus on the supply shortage, at least in the shorter term. And that's been one of the key factors that has been behind that move that we've seen in crude. I mean, we're up around 13% over the course of this year, but WTI futures, we now saw those surpassing the $80 level. Of course, it's a very psychological level that we track. So yeah, that short-term driver there, supply cuts, and we've had that focus on OPEC Plus expanding those. Perhaps it could even be until the end of the year, but longer term, of course, there's that perspective. Concerns around, of course, producers that aren't meeting those. Output has risen, and there's still question marks over demand from China.
Yeah, the China piece is massive, right? Not just for oil, but of course, really so many of these metals and industrial commodities. We've seen that big reaction when it comes to copper and iron ore continuing to languish into this Friday session as well. But take a look at what we've been hearing from Macquarie when it comes to their expectations of how at least this energy market is going to play out in the second half. They're talking about commodities more generally entering what they call a fresh cyclical upswing. Marcus Garvey, leading this team of Macquarie Group analysts, saying that the reasoning is that they see a tighter picture when it comes to supply, along with a more broad upturn in terms of growth across the global economy. So whether or not that sort of is poorly impacted by a softer recovery in China, it's quite interesting because they have lifted the majority of their commodity prices for 2024 from between 5 to 10%. They're estimating Brent at $83 a barrel in the third quarter.
Yeah, and certainly anyone that's an investor in some of the iron ore names in Australia would be grateful to hear that, because you've got that commodity continuing to slide back very close to the $100 a tonne mark.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day, you might be able to write poetry.
All right, take a look at one of the currencies in focus. Of course, we've been looking at the fluctuations that we've seen in the yen, and it has been on a bit of a wild ride, to be honest. Really moving after we heard from the Japanese news service Jiji saying that the BOJ is poised to end its negative rate regime as early as next week. We then really saw the yen surrendering that advance as traders seem to kind of lack conviction around what we could get from the BOJ. Let's bring in Garfield Reynolds, who leads our markets live coverage here in Asia. Garf, perfect timing to have you back with us, of course, to talk all things Bank of Japan. Are we a little bit fatigued at BOJ sort of expectations and speculation at the moment? And I suppose what's really going to drive the yen? Is it the BOJ or is it going to be the Fed?
Yeah, well, I think, Heidi, a big part of what's going on is that in what shouldn't be a surprise, really, the US economy is proving, again, far more resilient. Inflation is proving stickier. So with the jump in Treasury yields that we saw overnight, that the idea was that this year was supposed to bring a narrowing of the divergence between the Fed and the BOJ, because the Fed was going to cut rates probably quite rapidly and before the BOJ moved, and the BOJ was going to slowly move towards ending negative rates and then consider whether it would go higher at all. Instead, we've got a situation where that expectation for Fed easing has been pushed back and pushed back. Now we've got some people apprehensive that the Fed might actually raise its dot plots and say, instead of 3 rate cuts for this year as their base case, it might be 2 rate cuts. So that's kind of overwhelmed whatever the BOJ might do. That's why, and if that apprehension does play out, if we get, say, a BOJ that is remaining cautious and the Fed that says, actually, we might only cut twice, that's likely to be the driver for the yen.
Garfield, I'm just taking a look on the Markets Live blog at some of the commentary that's coming through the impact that the BOJ decision is going to have. You've got some saying that it could be a subdued effect on the yen. That's according to Simon Flint. Cameron Kreis as well saying it would be largely irrelevant for treasuries. James Crombie is saying it could be a negative for US corporate bonds. But where are we going to really feel the fallout, and just how much has really been priced in at this point as well?
Well, one of the concerns is that if you look at the two central banks and their track record, over the last few years, the Bank of Japan has actually been far more capable of shocking markets at the time of its decisions than the Fed has been. Powell is very, very keen to telegraph moves going in, and even if the Fed does shift its dot plots, that's likely to be then accompanied by Powell saying, look, if things develop the way that we're going, we could still end up doing more than is in the dot plots. That's their base case. And after all, last year the Fed ended up varying from its base case by the end of the year. So you might get a hawkish dots followed by a dovish Powell. Whereas the Bank of Japan actually is facing a far more challenging set of circumstances. It needs to end these two extraordinary things, negative rates and yield curve control. Perhaps it carries out an immaculate exit from those two things, but there's every chance that even if the BOJ doesn't do anything on Tuesday, that the communications leave open the door to concerns that it might allow yields to soar, or it could even be that yields do actually jump in the wake of a BOJ no decision because of what it says about what it plans to do, how it plans to do, or because it doesn't say enough. Where the tail risks are much, much fatter for the BOJ. Perhaps this week doesn't bring anything, but there is that outside chance. If something is going to shock markets in the coming week, it's more likely to be the BOJ than the Fed. So at the moment, the Fed kind of has control of where the yen is going, but the BOJ could yet upset everybody's apple carts.
All right, that was Bloomberg's Garfield Reynolds there. And of course, a lot of the direction or the focus for the BOJ next week is going to come down to the results of these wage negotiations. Today, we're actually going to be getting those union group results coming through, and we've been reporting across the week some of those preliminary numbers, and it does seem like it's going to be strong here. Nomura has actually been crunching the numbers on this, and they're saying that the aggregate wage hike is going to be 5.1%. So that would be a lot higher than what we saw last year, which was for 3.8%. Which was already the largest gain that we'd seen in 30 years. So 5.1% would be a significant jump here. Their base case is for around 3.6%, but they're saying that already employers have accepted about 90% of wage hike demands. So yes, big focus on those numbers, those results, and they're actually due from Rengo. That's the largest union group. They're going to be reporting around 4 p.m. or just after 4 p.m. this afternoon in Tokyo. But let's get more perspective on Japan's employment and hiring scene. And joining us now from Tokyo is Toby Truscott. He's Managing Director at Michael Page Japan. And Toby, I'm interested because, as I said, over the course of this week, we've been reporting these company by company, and some of the wage gains have been as high as 15%. So does that sort of square up with what you're seeing in the market at the moment?
Yeah, it certainly does. It's really positive sentiment coming through in the market as a result of those wage increases. I think we've been in an environment here in Japan for the first time for a long time where we've seen inflation impacting cost of living. And then as the average person working in a role sees that their organisation is actually agreeing to these wage increases, it sends a really positive sentiment into the market. As people look out into that market as well, they will be seeing what other organisations doing these things and wondering what their organisation is going to do for them. So a really positive thing for us here in the market.
And what sectors are seeing the best gains, or which workers are most in demand at the moment?
So there's a few sectors that are in demand at the moment. I'd say particularly the technology sector. There's been quite a lot of investment in that sector over the last couple of years. And so that entire sector, I'd say, is massively understaffed. And so areas like software development, network engineering, and some more specialist areas like cybersecurity and AI and the like. The aging population here in Japan is also putting some strain on the healthcare sector. So that's another sector where we're seeing high demand for people. And that's where there's also required, some upskilling in that market as well.
Toby, I wanted to ask about, I suppose here you would say, the sort of the vibe, right? Sentiment, confidence. Are you feeling like there has been a significant change?
I always like talking about the vibe. Look, I would say the vibe would be one of cautious optimism. All these things that are happening at the moment seem to be balancing each other. There is no question, though, we are definitely still involved in a war for talent here in the Japan market. The demand for skilled workers far outstrips the supply, and that I don't see changing in any great way, no matter what decision comes from the BOJ. Because that has been that way for quite a long time. We're not at historic highs, but we're certainly not at historic lows. So I would say one of stability and cautious optimism would be the vibe.
Are you seeing much divergence within different sectors and industries?
Sorry, when you say divergence?
Between different sectors and industries and when it comes to hiring and confidence?
Yeah, look, I think the confidence is coming from sectors where they are able to find the workers in the market. So I think organisations that are taking an approach to ensuring that the aged workers are having opportunities and making use of that part of the workforce, but then also foreign workers in Japan. I think that's another area where the government and organisations have worked pretty hard to try and increase that. I think we're at record highs at the moment. I think there's about 2 million foreign workers in the economy here in Japan at the moment, which has basically doubled over the last 10 years. So that's probably an area where you can see organisations taking approaches to bring those people on board will have a really positive impact.
I'm curious, and I'm sure a lot of our viewers are curious to know as well, when it comes to the financial sector, bankers' pay, is that sort of that gap between Japan and what we see in other Asian countries or cities, is that sort of starting to narrow a little bit?
Yeah, I would certainly say that is the case here. The financial services sector in Japan is not at the heady heights as it was back in the 80s. I think what we've generally seen over the last number of years was lots of organisations here offshoring people in that sector, and it doesn't have the same lustre as it has had in previous iterations. So I certainly would agree with that sentiment.
Toby, great to have you with us. Toby Truscott, Managing Director at Michael Page Japan. One of the other stories that we're following, Bloomberg Intelligence says finance professionals in India are in line for higher salary hikes this year than those in Hong Kong and Singapore. Pay packets in India could rise by 10% compared with 4% in the two financial hubs. HSBC, Julius Baer and DBS are among the companies ramping up their headcount to tap into India's economic boom as China's growth slows.
All right, Heidi, taking a look at how markets are tracking so far, and you're seeing that big drop coming through for the ASX 200 so far. We can get to some of those big laggards in a moment, but broadly, we're setting up for quite a bit of weakness in the session so far. Nikkei futures, that contract in Singapore just coming online. Again, you're seeing that drop being reflected here. It does track the US session as well. We had stronger than expected PPI numbers coming out. We saw resilience in the labour market as well, and so that just tells us that the Fed can afford to take its time when it comes to cutting rates. So that was sort of the prevailing sentiment. And then you're adding into it again those concerns that you're seeing reflected in iron ore prices, and that's why that materials sector is dropping so much in Australia today. But let's change on, take a look at some of those miners in particular here. We are seeing weakness across the board so far in the session, the likes of Fortescue, Rio, BHP as well, all dropping here at this point in time. Iron ore prices, we just had that contract coming online in Singapore in the last 10 minutes or so, and again, it's further weakness. We are down on that commodity for several days now in a row. It is very, very close at this point to the $100 a tonne mark, and you compare that where we were just a few weeks ago, back around the 110 level, so it's been quite a steep drop there, and as we said, weaker, Heidi, for a third straight session, and concerns also playing into that around China's property sector.
Well, Bell Blackstone says real estate prices have bottomed and there's a great opportunity to buy assets at beaten down prices. President and COO Jonathan Gray told us exclusively why investors need to move fast.
As investors, it's interesting. I would say one of the things I worry about is that we wait too long, particularly in some of the sectors where there's been a bigger decline in value and people are more cautious. So we had a meeting this week with our growth equity team, and we were talking about some of the opportunities in that space. A lot of investors are obviously cautious there. Commercial real estate, which I'm sure we'll talk about, the sentiment has gotten quite negative, and the fundamentals feel like they're bottoming. So I think as investors, sometimes one of the risks is you miss it by being overly cautious, and I think now is probably a good time before rates come down to move.
But so move on what? And again, do you have an allocated, capital that you want to try and get in as soon as you think,
There's no sort of specific, like, we have a budget to spend this much. It's just more directional. It's that, in fixed income, the spreads in a lot of asset classes are still wide by historic standards. Base rates are still pretty high, so that's a good area. Being a capital solution provider today, helping people get some liquidity makes sense. People who need to deleverage, working with the banks and giving them some capital relief. And then particularly in sectors where we have high conviction in digital infrastructure, in green energy, in life sciences leaning in. So I would say it's pretty broad-based. And then specifically on real estate, definitely here in Europe, the sentiment's so negative, try to move faster.
That was the Blackstone president and COO, Jonathan Gray, speaking exclusively to Bloomberg's Francine Lacroix. And, of course, as we've been discussing just in the last few minutes, the focus today for Japan is going to be on the results of the union wage negotiations or labor union negotiations around salary gains in Japan. The indications is that we're going to see some strong numbers based on the individual companies that we've had reporting across the course of this week. But now we're actually hearing from the finance minister, Suzuki, who's been speaking in Tokyo, and so far he's saying that they are seeing, again, strong pay hike move in the wage talks. Something they're closely tracking, of course. The BOJ is very closely tracking it because it's going to play very, very closely into their decision of whether to exit negative policy settings next week. Suzuki, again, saying that he thinks this year's wage hikes are likely to outpace last year's. They were around 3.8% last year. The government, of course, going to continue efforts to sustain wage momentum. There has been criticism and pressure on the government to do more to help with cost of living pressures. But Suzuki saying that he is going to refrain from commenting on that BOJ policy meeting next week, again, reiterating that call that Japan is not experiencing deflation. But we'll have more ahead. This is Bloomberg.
After last month's massive solar flare added a 25th hour to the day, businesses are wondering, what should we do with it?
Bacon and eggs, 25/7.
You're darn right.
Solar stocks are up 20% with the additional hour in the day.
I'm ruined.
With the extra hour, I'm thinking company-wide power nap. Let's put it to a vote.
This is going to wreak havoc on overtime approvals.
Anything can change the world of work. From HR to payroll, ADP designs forward-thinking solutions to take on the next anything.
These deflationary pressures and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show, now weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
The U.S. ambassador to China, Nicholas Burns, says channels of communication between the two nations' militaries are starting to open up. Let's get more from our exclusive interview as the ambassador weighs in on U.S. alliances in the Asia-Pacific and Beijing's increased military spending.
The two presidents, President Biden and President Xi, agreed in San Francisco that we would begin again serious high-level communication between our militaries. This is critical. Has it happened? It's beginning to happen, and it's critical because our two militaries are operating in very close proximity to each other in the Spratlys and Paracels and the Senkakus and the Taiwan Strait. And so our new chairman of the Joint Chiefs, Chairman Brown, has had a discussion with his Chinese counterpart, and we hope very much that Secretary Austin will be able to talk to his counterpart in the coming weeks or months, and then we hope there'll be even conversations at a more tactical level between our militaries. This is common sense because you want to drive down the possibility of any kind of accident or misunderstanding between our air forces or our navies.
We do know at the National People's Congress, China increased the military budget by 7.2%, the biggest increase in 5 years. First of all, are you concerned by that, or how should we read that?
Well, what we're concerned about is the fact that the PLA is not transparent about how the money is being spent. You know, in the issue of China's nuclear weapons buildup, they're not transparent with the rest of the world, and that's a problem. And of course, you know, the United States has been a principal military actor in the Indo-Pacific since the close of the Second World War. What we've been doing, and President Biden has had a lot of success in this, is to build up our alliances with Japan, the Republic of Korea, the Philippines, Thailand, Australia. We've created AUKUS, and of course we have the Quad with India, all designed to protect the democratic countries of this region and protect international law in places like the Taiwan Strait and the South China Sea.
We're also hearing that the Biden administration wants to and is exerting pressure on allies like the Netherlands, like Japan, like Germany, like South Korea, to further the curbs of other products into China. How does that not expand that pressure and actually bifurcate the relationship further?
We've been very clear that we adhere to a small yard, high fence scenario, meaning these are targeted actions that regulates AI investment by American companies in the AI sector here. These are common sense actions by the United States. Any American government would have to take this action given the competition we have underway in the military sphere between the People's Liberation Army and the United States. And I don't think there's an American alive who would say that we should sell advanced technology to the PLA. So the President's acted in the national defense here, and as I say, we're not going to negotiate or compromise on this. And these are the actions that a government has to take to protect in the 21st century, in an age when technology is at the heart of international politics. Some of it has to be regulated.
That was the US ambassador to China, Nicholas Burns, with our chief North Asia correspondent, Stephen Engel, in Beijing. And let's get to some other geopolitical stories we're tracking now. The Biden administration has sanctioned 2 Israeli settlements in the West Bank and called on Israel to do more to end violence against Palestinians there. It's the second time since February the administration has imposed sanctions on Israeli settlers. Separately, US Senate Majority Leader Chuck Schumer has broken with official policy in calling for Israel to hold new elections. The leader of Yemen's Houthi rebels says the group will expand their anti-ship attacks to Israel-linked ships in the Indian Ocean. He says the Houthis carried out 3 attacks in the Indian Ocean this week and won't stop until the war in Gaza ends. A shipbroker said this week that sea traffic using the Cape of Good Hope route is up 85% since December due to the Houthi attacks in the Red Sea. You can watch us live and see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions we talk about, plus become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Japanese indie video game studio Pocket Pair has found success with its game Palworld after partnering with Microsoft's Xbox. We asked CEO Takuro Mizobe about the philosophy behind their genre splicing hit, which fans describe as Pokemon with guns.
Pocket Pair has always loved creating games that are fun and for everyone to play together. We think Cute But Aggressive is one of the examples of fun games where cute characters armed with guns go through different situations. I looked at RimWorld from Ludion Studios as reference for my ideas.
Your game is on Xbox. How did you create this closer relationship with Microsoft than Sony? And will we see Palworld on PS5?
Our partnership with Microsoft started when they approached us to discuss adding our Craftopia game to Xbox Game Pass. It was a natural progression of our relationship when we were asked if we would be interested in adding Palworld too. PlayStation 5 would be another option for it, but we're still in the middle of discussions. A final decision is still some time in the future.
So now that you've had this mega hit, what are you going to do with your profits? Are you going to maybe look for hiring people or M&A activity? What's next for you?
We plan to expand our team in the future, but we are and will remain an indie game studio. Big budget AAA games are not for us. Instead of large-scale investment, we want to gradually scale up, taking stock of the situation and making multiple fun games like Palworld that will become world-class names.
Pocket Pair CEO Takuro Mizobe speaking to Bloomberg's Kurumi Mori there. Taking a look at how we're tracking, and not particularly well when it comes to sentiment here in Australia. In fact, we are seeing downside of about 1.2%. That is about a 3 or 4 week low for the Aussie markets. And really, we are seeing a broad-based sell-off today, but the biggest laggard remaining the materials and mining sector as we continue to see downside when it comes to iron ore, down almost 10% this week. This is the worst week for iron ore since May. It's also on track for a 6th straight day of declines. We're also watching, of course, Japanese assets as we get into the delivery of that key wages report this afternoon.
Growing up, I was testing a lot of VFX stuff by myself in my parents' basement. I love the idea of illusion. I love the idea of wowing people. Now, working at bigger capacities, bigger scales, having a connected ecosystem has made it easier to collaborate. I'm turning this business of one into a family business. And then I walk in, I'm like, check out this new shrink ray I have.
I got a good idea.
My oldest son, he'll often say to me, when I grow up, I want to work at the warehouse and I want to make videos.
Oh.
names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.